Let's talk to David Paul. He's the MD of VectorVest UK. Very good morning to you,
Good morning,
David.
Mus. Yes.
Right, we've got some thought-provoking slides to whiz through. Let's go to the screen. The UK market timing. Short term, I assume you're on a what? Sell signal?
The short-term trend turned down a day or so ago. The longer-term trend is up since the 17th of April. And today I'm going to talk about our most conservative trading and investing system, which is called worry-free investing. And worry-free investing uses the confirmed calls, the longest-term measure of the market that we have, to actually enter positions and to exit positions. So the worry-free system is still long of the market today because of that. Okay.
Understood. Okay, well, let's move on to the next slide, relative safety. Well, what does this mean?
Well, every day VectorVest sorts all of the shares in the London market by a combination of value, safety of earnings, and trend. And in our more aggressive trading systems, we in fact look at the top shares as sorted by VST. And that finds shares that are trending with a reasonable amount of momentum. In our conservative trading plan called worry-free, we actually sort the shares on the London market by relative safety alone. And that brings those shares that have the best track record of making money, where all the financial ratios are getting better, to the top of the pile. If you're a worry-free investor, you don't want surprises, and those shares that have the highest relative safety, that reduces the probability of surprises, so that you can play a bit of golf or go fishing or do whatever you want to do without a great deal of stress.
What a nice thought. Yes. Okay, so let's move on then to the summary. What is this? What's this summarising?
This is the methodology, and it's purely mechanical. When we get a confirmed up signal, and the last confirmed up signal was on the 17th of April, we sort all of the stocks in the London stock market by relative safety, and we purchase the top 10 by relative safety, ensuring that we don't have any more than 2 out of the one industry group. So we do our best to try and spread our money across the market in the top 10 shares by relative safety. Now, if the general market is going up, there's a very low probability that you'll get stopped out of one of those shares. And VectorVest calculates a stop loss every single evening for every share in the marketplace. But it could happen. A company could drop the ball. If you get stopped out, then resort and purchase a share that you don't already own. When the general market is rising, we want to be 100% invested. Now, sooner or later, markets are living entities. They breathe in and they breathe out just like us. Sooner or later, we're going to get a sell signal. If the general market is falling, then there's a much higher probability we're going to get stopped out of one of our worry-free shares. If you should get stopped out when the general market is falling, we don't replace, we build a cash position. So if in a strong sell-off we get stopped out of 2 shares, we would have 8 shares in the stock market, and we would have 20% of our portfolio in cash.
Sensible.
When the next buy signal occurs, we run the sort again, and when the general market is rising, we're always fully invested. That's the process, and the process is fairly automatic. Now, I've tested it in the next slide. Well, first of all, the objectives. The objectives are capital appreciation, of course, dividends, of course. Now, if you've got the ability to write options, then you can certainly make an extra stream of income by writing covered calls. At the retail level, that's quite difficult in the UK. In the US, it's exceptionally common for investors to actually have an extra stream of income by writing covered calls on the shares that they've got. Writing covered calls is the most conservative income.
Let's just make sure, that people understand that writing covered calls, you've got limited downside, whereas if you start writing puts, and the likes, you really should be an expert in this field.
That's right. It's the most conservative option strategy, but at the retail level in the UK, quite difficult to do. It's easy to buy a call, it's easy to buy a put, but to actually write an option at the retail level is quite difficult.
Understood. Okay, so let's talk track records.
Well, I tested this over the last 20 years, so it's not aggressive trading. In that 20 years, we had 177 trades. of which 10 were still open at the end of the period. We started with $100,000, and in the period, we collected $51,000 worth of dividend income, which I haven't added into the next slide, which is the track record in the US over the last 20 years. You can see the bear market between 2000 and 2003 where it went sideways. You can see the crisis where it pulled back, and that is almost an 18% compounded rate of return over the last 20 years, which is twice plus the S&P 500.
Okay, very good. So let's move on then to the UK.
The UK,
how does that look?
10 years, pretty much the same. We turned £50,000 into £269,000 over the last 10 years. And again, no dividends have been added into that. And again, that's a 17% compounded rate of return with very, very, very little effort.
That's extraordinary.
Yes, when I take it into the city, people don't believe it. That's why we offer a trial of VectorVest so people can actually prove it for themselves. And in the last slide, what I've done, and I hope people can see it, is that I've looked at the track record since the last confirmed up, which was a few weeks ago on the 17th of April. And we simply bought the 10 top shares by relative safety. And in the last, I suppose, 2 months now, that portfolio was up 16%, and the general market was up slightly over 5%. So it's outperformed the general market by 3x over the last couple of months, and 16% up for the year. You could nearly call it quits.
But what I like about this strategy is that you're not basically going in and out of the market. It is a buy and hold strategy with a stop loss, okay? If you go into a sell signal, you go to some cash. So this is all pretty sensible, right?
It's a mechanical system that's exceptionally easy to follow. It keeps you out of the noise of the market. Very, very little trading. In that test in America, on average, there was one trade every 6 weeks, which is hardly aggressive trading. And it rides the trends in the strongest UK companies, those companies that have got a strong track record of making money, and all those ghastly financial ratios as a mechanical engineer struggle to get my mind around. All of those are getting better. At VectorVest, we offer a 30-day trial of the product. We have a full back tester on the product, and you can test that both in the American market and in the UK market onto your blue in the face and prove that it works.
Okay, so when we talk about a 30-day free trial, okay, do you need to have a sophisticated computer? Do you need to have a telephone line? Do you need
you need an entry-level computer, and you need an internet line. That's all, basic internet line. It's not a free trial. It's £5.95 for the 30 days, so it's nearly free. On the 30th of June, Saturday week, I'm doing a full-day seminar on VectorVest in central London here at the Regent's Park Hotel. If you go to the vectorvest.co.uk, click on the events page and you should see that. And by the end of the day, you will be easily able to replicate these results and some of our more aggressive trading plans as well for those people who want to ride aggressive momentum and build their ISA portfolio much faster.
On that note, David, thank you very much indeed.
Thank you, Mus.